If you want to make money in the market, don't fight the market. Many traders are fighting with the market, or they think that it is a fight. It is not a fight. Your whole idea in trading should not be to fight with the market, but to find very low risk opportunities. And in order to do that, what you need to do is to understand what kind of a phase the market is in. There are periods in market when you can make money very easily. There are periods in market when you can make money easily on the bearish side. There are periods in market where it becomes very choppy. There are periods in market where you're going to find that their risk of trading certain kind of setup is very high. The current market conditions have been choppy, and they've been choppy since like almost a couple of months, where there have been like sharp moves up, sharp moves down. And in a market like this, if you're fighting, and especially many people have only one way of trading, which is long side, and they're fighting, and in the process what there is happening is they're bleeding. Why are they bleeding? Because they're fighting the market instead of understanding the market situation, market conditions, and accordingly changing your strategies. If you want to survive in this game, do not do not look at it as a fight. Look at it as a very systematic way to extract money from the market. So let's look at the market a little bit to see how without fighting the market, we can find opportunities to make money in a market conditions like currently, which we are experiencing. For that, let me use the telechart to show you where we are in the market conditions, or what kind of things which I look at, and then what kind of setups I've been looking at, and what kind of tactical adjustments which I have done. So if you look at currently the market and look at an index like say SPY, what you will see is that this particular index SPY has been choppy since like almost November, right? And since November, you had down days, you had up period, down, up, sharp 3 days up or 4 days up, and then down and down, right? And similarly, if you look at the small cap stocks, which is IWM, you'll see that like they actually topped out in November, and from November it has been a very choppy, like not choppy so much. They were down first leg, there was a little bit of bounce, then again went down, and again in the last 1 week they've been going down, and as a result many of the stocks have gone down a lot. Similarly, if you're looking at the Nasdaq side of this equation, you will see that it's been very choppy since November, middle of the November, right? And a down moves up, big bounce, nothing happens, down moves up, big down, 2 days, 3 days of bounce and going down. So when markets are smoothly going up like they were in this phase, it is easier to make money on momentum burst. It is easier to put in a trade and it will work for 3 to 5 days. In a market conditions where you have so much of a chop, and if you try and keep on fighting with the same setup, you're going to have a lot of bleeding which is going to happen. So in order to avoid that kind of a thing, what you need to do is to understand the phase of the market and what setup is likely to work. Like one of my setup is anticipation, where I anticipate a stock likely to break out and enter ahead of anticipation, ahead of the breakout. I have not been using that strategy at all. The reason why I have not been using that strategy is if you use that strategy in a market conditions like this, you're going to get chopped, because from day to day market has so much volatility. So if you start using anticipation, you are fighting the market. Stop doing that. If you're using a classical swing trade breakout of 3 to 5 days, because many moves in the market itself are not of 3 to 5 days, what is happening is you're going to get again chopped. So stop trying to find these moves which are like where you put in a trade. You put in a trade like that here or here during this period, it was working very well. Or if you put in a trade and 3 to 4 days it worked. Now here it hasn't been working. So yeah, either one of the strategy, if you don't want to fight this kind of a choppy environment, is to sit out, which is what a lot of people do. They don't trade in these kind of conditions. Or you can go on a lower time frame and trade, or you understand the market phase, because underlying the market you will see that there are many down moves which are happening. So the setup which has been working in the last couple of days has been a short setup. So if you look at, say, something like AVGO, right, there was the first phase down, then there was this small counter trend bounce, and then here the stock went down, and almost in a day itself it went down $33, right? So this is the kind of stocks which I shorted on this day, right at the somewhere near the open, right? And that is one which was the thing. The other kind of stocks which have gone down, and which is very similar pattern you will see on all of them. The first leg down, they had this minor bounce, and then this day was negative, and from there, if you shorted in 3 days, the stock made $55 move or something. So shorts have been working in these market conditions. So if you don't want to be fighting the market, you have to be on the short side in this particular condition. Selectively, very few longs are working. Same way, if you are trying to buy earnings breakout in this market, you're just going to be fighting the market. Any good news kind of a setup which is happening here is going to fade. So in fact, one of the ideas which I've been trading is, instead of buying an episodic pivot on a stock which has good earnings and trying to make money on the bullish side, because you know the market itself is not favoring that, is to fade a gap up on earnings, and that has been working very well on a number of stocks. Like FedEx a couple of weeks ago had earnings, and it gapped up, and then it kept on going down for the day and offering a good risk reward. And this is very common. You'll see even 2 days ago or yesterday, Taiwan Semi had earnings, right? And if you tried to buy it as because based on the earnings, you actually would have lost money, because the stock opened with a gap and it spent rest of the day going down. So positive news in this particular market condition, if you continue to buy as a positive news, you will be fighting the market. So stop fighting the market, fade those moves. And that is how you make money in markets, by understanding the phases of market and not fighting them. If you want to stop fighting the market, the easiest way is to create situational awareness every day. Look at what is working, what setups are not working, avoid setups which are not working, bullish breakouts not working well currently, anticipation on bullish side not working well. What is working? Shorting is working well. Intraday strategies are working well, because volatility is very high during the bearish phases. So in Tesla's case, supposing, you will see that intraday, so many swings it made, right? And a big swings. That is why this is a very good market for a day trading kind of an environment, because when volatility is very high, then stocks make big up or down moves, very sharp up and down moves, and that can be very profitable if you're an intraday trader. So stop fighting the market. If you're a growth investor and you continue to hold stocks and you continue to buy aggressively, you're just fighting the market and you're not going to make money. Stop fighting and find the right strategy, right setup for these market conditions, and only use those right setups and right strategies, and you will make money.